Good morning. Hello everyone and welcome to another exciting edition of ACY, what's going on in the world today, and markets of course. Well, again, the Fed has dominated most news headlines and the story of the day, with Fed Chairman Jerome Powell testifying at the Senate committee. He was given a very light run of it actually, not very many tough questions from the senators there at all, so he kind of was able to just say what he pleased without being at all interrogated. He did again reiterate that he does see the inflationary pressures as temporary and that the Fed will not be reacting in advance of those inflationary pressures. He doesn't think they'll be persistent and therefore the Fed would have to have its hand forced to be raising interest rates. Now, markets took that as a very bullish factor, of course, but in reality, what it said to me is a slightly different take to what you're seeing in today's media headlines. What it said to me was the Fed has confirmed it will be late in the next raising rates cycle. And that could in fact be an even greater risk to the US economy long term than what the pandemic was. Economic data across the board is obviously continuing to rebound around the world and in the United States and in Australia, although in Australia particularly we're seeing that rolling over aspect that I talked about yesterday. But the US data is reasonably good, and the Fed is saying we're going to have higher inflation for a while, it won't last, so we're not going to do anything, we're going to sit on our hands. In every interest rate cycle we've ever seen, the Federal Reserve, most central banks are always behind the curve, they're late to react, and then they're forced to overreact. I mean, in the middle of the GFC, the RBA, Reserve Bank of Australia, was still doing its last two interest rate hikes well after the GFC had started, or the crisis in the US had started, which was very poor form by the central bank then indeed, when we all look back on it, and I called it that way at the time. So central banks tend to react too late and are then forced to overreact, which causes damage to the economy long term. And the Fed, to me yesterday, Jerome Powell just said, I'm going to be a cautious person, not be seen to make any bad decisions, and I'm going to wait until all the data is forcing me to raise rates before I do. Now, that doesn't mean they won't be tapering. They're going to be tapering, I would suggest, as soon as next month. The tapering process will begin on the bond buying program. But interest rate hikes are a definite, but now they're going to be further out and of greater magnitude, which is not good for the US economy or markets overall. In terms of the virus these days and the vaccines, latest research is showing that 2 doses of vaccine are 70 to 90%, have a 70 to 90% impact on hospitalizations, reduction in hospitalizations. That isn't a 70 to 90% protection against the Delta variant or its symptomatic transmission. So we are in for a period where that Delta variant could continue to cause problems around the world. New Zealand considering some sort of closure today or shutdown with a case there that was sort of moving around the community over the weekend from Australia actually. In Australia we have some problems in Sydney. I'm not saying any of these issues are going to stop our economies the way they did in 2020, but it's not by no means smooth sailing. Getting along now to some of the economic data news. EU consumer morale was very high and strengthening. Note, it's still not a great positive number, but at least it's a better number than we've seen for some time. So, and that's to be expected. Everyone gets, I guess, even more excited than they would otherwise be to just be doing what they were normally doing previously. So that's why all those kinds of data streams are going to look good. US existing home sales continued to decline, but there were increases in home prices. But actual number of existing home sales falling away again. That is not a good trend. I'm going to be writing a big report soon on the risk of, is this the second great US housing bubble beginning to unfold, which no one else in the world is spotting just yet, so we'll see how that goes. The other thing we saw was in the US 5th District, which is those lower states of the United States, North Carolina, South Carolina, Virginia, that area of the United States, strong rebound again in the data, and that is good to see. Over in the UK, we had the strongest manufacturing activity index improvement in 30 years. But again, when you look at the chart there, you can see it's really only a modest recovery of all the lost manufacturing output that has been occurring in the UK, which has been particularly hard hit by the variant. We're going to move into the price action section now, and we're going to do that a little bit like the weatherman for you. And good morning. I've always wanted to be the weatherman, and here we are with the price action view of the world. I've been a little bit worried about commodities and how they're going to go for a while now, that commodity boom was peaking and there could be some downside risk for commodities, which should help take away some of that inflationary pressure that I've been speaking so much about recently. But for the moment, obviously commodity prices have been very high, oil remains very strong, and that is a distinct inflationary pressure. However, I'm not the only one in the world who's worried about commodity prices, because if you look at BHP and Fortescue, stock prices, they've obviously, this is BHP weekly, and you can see there's definite possible tiring out process there. You wouldn't want to see BHP snapping much lower, or that market's going to be in a little bit of trouble there. I think that's something to keep an eye on. That's a big potential topping out formation here. Keep an eye on that one. Now we move along to Fortescue. And Fortescue's a very similar price action, but not quite as bearish. It looks like it's finding some support through here on any further pull down. And it would probably take BHP beginning to fall sharply for the Fortescue price to break lower. Nevertheless, it's still something to keep an eye on. You've got a little bit of a triangle formation there, but I think through here, this sort of 2090, 2095 area should be support for Fortescue. If that gives way, we could be in a little bit of trouble. Moving along to the Aussie dollar now. We had that big US dollar strength phase, the Australian dollar building a lot of very tight energy down there. Slightly breaking up today. If it got above sort of 75, 65, 75, 75, that's sort of immediate resistance. It's only about 10 points away as I'm speaking. But if it can get above there, you're going to have a little bit more of a bounce on the day. But look at the extent of the fall. This is a very heavy market in that it hasn't been able to react the way, for instance, stock markets did. Stock markets had their big down day and then they went straight back up over 2 days and, you know, looking very firm for the moment in the US. But the US dollar versus the currencies look heavy. The US dollar has stayed very strong. There is a little bit of concern in the market generally about where the world's going now with these inflationary pressures. Most people, a lot of people are starting to come to my way of thinking that they are actually going to be higher and longer than the Fed itself expects, and that the Fed could in fact be getting that forecast wrong. So that would be one of the reasons why people are thinking we're going to play a little bit safe on the currency front. And also, of course, the US will be the first of the major powers, major economies to be raising interest rates out of this period. And so that's why you're getting that US dollar strength, and that's why the Australian dollar is having trouble bouncing here. So I would respect any further strength on the day for the Australian dollar, but I think it may be a rally to sell. We'll see how that unfolds. Moving along now to the euro. And again, it's just that US dollar story, but look at that topping out formation. If you look at this, this is almost here before, if you don't look at that part there, this looks a little bit like that BHP chart I showed you. And that's why I showed it to you, because there is risk of that downside break, and that is something to be mindful of. Thank you very much. I hope you enjoyed my charting weatherman forecast, and I wish you all the very best in your day from ACY Securities here.